Welcome to Common Sense Investing. My name is Cameron, and today I continue my journey in trying to find the next 10x penny stock. As always, I look forward to giving you introductions to good companies that also have the potential of being good stocks. Today I get to introduce and discuss some of the rewards and the risks of investing in McCoy Global, trading in Canada on the TSX under the ticker MCB. Tubular running services just got smarter. What does that mean? Well, this is one specific niche in the oil and gas sector where tubular refers to any type of oil field piping such as casing, tubing, drill pipe, line pipe, structural pipe, drill collars, and all the connections. McCoy Global intends to be a leader in tubular running services, TRS, to make the oil and gas sector more efficiently reach and distribute hydrocarbons. And to understand McCoy Global a little better, you have to go back a ways. This is their annual report from 2015 talking about their numbers back in 2012, 2013, and 2014 when they were spending 3% of their revenue on research and development. What they were doing at the time was hydraulic power tong products. However, at this time, they developed their first technology, their flush mounted spider. And with that, they were looking to become a technology leader in tubular makeup handling and data acquisitions. Now, at the time, back at the start of 2015, this was a strong growing company that was investing a lot of money, making $120 million in revenue per year, putting a lot of this into research and development of these products. But that was when the oil and gas train fell off the tracks, because after 2014, if you remember, the oil and gas sector went through a 7-year down cycle. Yes, 7 years of terrible oil prices and declining revenues because it costs more to produce a $20 barrel oil than you could sell it for. And the only companies that survived, you could see this EBITDA severely switch from positive 19 million down to negative $10 million. The only companies that survived that downturn was the companies that learned to cut costs and run efficiently. And you could see here in 2018, McCoy Global did just that, getting back to a positive EBITDA despite the terrible macroeconomic conditions. They've been increasing their EBITDA significantly since that time, since 2018. And then recently, 2022, 2023, they have also started to see a positive upswing in their revenue. This is great news for the company. McCoy Global was able to suffer the macroeconomic headwinds, survive, thrive, and now come out of those terrible conditions, making more money. This reminds me of another oil and gas related company that's high up on my top stocks list, Enterprise Group, that has done extremely well this year. But before I look at the numbers and tell you how they did it, the company wants you to read these disclaimers. And my disclaimer, this is not financial advice. I'm not a financial advisor. I'm definitely not your financial advisor. I just like making very quick introduction videos to companies that I think have a shot. So what has changed for McCoy Global in the past decade? Well, after starting out with that first technology, the flush-mounted spider, they have been slowly building out, developing, and releasing other technologies and products that are creating an entire solution for oil and gas providers. These technologies are efficient, they're safe, they're now automated, and they are moving into a data collection SaaS model. Their growth is robust and diversified with a nice margin of safety here, basically splitting their growth between North America and the rest of the world with many trusted industry leaders. And when you have so many quality products and technologies to market, you could focus on the higher growth, higher margin revenue sources, which shareholders love. And how do you attract new shareholders? Well, this is their Why Invest in Us page, talking about how they've been around for a long time, providing TRS equipment and new technology to blue chip companies, saying they have the broadest product and service offering amongst their competitors. So they're saying we're safe. The other thing that makes them fairly safe is they have $9.2 million of cash and no borrowings as of this presentation, which is incredible. They also say that their adjusted EBITDA is up year over year of 48%. That made shareholders very happy. And they have minimal maintenance CapEx requirements. So, I mean, good news here, safe. Good news here, cash safe. But what drives a company up in the future? What their outlook is going to be. How is this company going to continue its growth? They're saying they have significant upside with the adoption of their new technology. And their technology has changed over time. Originally, this was the conventional TRS system that they were using for many years. It made them a lot of money. Eventually, as they developed more and more product offerings and technologies, they moved into this. It saved a little bit of manpower, saved a little bit of costs. They were still doing well, even though the macroeconomics weren't that good in oil and gas. However, they are now saying they are at an inflection point because using their smart TR system, smarter, whatever that is, you could see the significant reduction in manpower needed, which saves costs, which saves time, which saves money. And I mean, what company in the oil and gas field doesn't want that competitive advantage, doesn't want that increased safety? A lot of times companies are hired due to their safety record more than how much they cost, right? So if you can reduce the manpower, it sucks. It's actually removing jobs out of oil and gas. But at the same time, you could do it safer, you could do it more efficiently, you could save money. It's going to happen. This is the future. And so this is what the company has been doing for all these years, and we're just lucky enough to be about right here. Is this the right time? Is this an inflection point for McCoy Global? I'd like you to go do some research on it. Because so far, yes, I mean, they had a bit of a drop during COVID. Of course, there was less work getting done, less drilling. But since that time, revenue is up, adjusted EBITDA is up. Investors have been noticing. Market cap went from 54 million Canadian to 82 million Canadian, so it's up. The EV over EBITDA valuation went from 4 to 5.5. Still pretty good. I mean, are we catching this company on an upswing? This is what I'm looking for in a company. And I mean, McCoy Global meets all this. Revenues trending up, earnings trending up, cash trending up, ROIC trending up, valuation trending up. And if you've read How to Make Money in Stocks by William J. O'Neill and you like applying the Cancelim method to your investing, I mean, looking at McCoy Global, new products, yes. Annual earnings getting better, yes. Currently quarter EPS improving, yes. They're a leader in their industry. They're getting institutional support. The only question, the only concerns I have for McCoy Global right now are the demand and the market direction. So no company is perfect, but the price of oil has been going down. Every company has risk. What are the risks with McCoy Global? Backlog and orders received are down since 2022. So 27.4 million back in 2022 for backlog. Now it's down to 22 million. Orders received in Q3 of 2022 were 23 million. They haven't had another quarter like that. And this most recent one was 16.7 million. So I leave you here to do your own research. Do you trust these facts? Because revenue has been trending up, adjusted EBITDA has been trending up, and the company has been saying that outlook has been pretty good despite the macroeconomic headwinds faced in this industry niche. However, you also look at the backlog and you look at the bookings and you wonder if there isn't a little bit of weakness here right now. What do you think of McCoy Global? For me, it's more than good enough to go on my watch list. And to continue finding, researching, and talking about companies like McCoy Global, I have a Patreon. I will link to that down below in the pinned comment. And coming soon, answers to the top questions I get asked of how do I find and research microcap stocks. Starting in December, I plan on releasing some videos discussing exactly this topic, and I can't wait. Thank you for your time. I always appreciate it. You've been watching Common Sense Investing. My name is Cameron. I will see you soon.